And now, The Money Show with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud to support Genses Energy's investment in the infrastructure powering West Africa's growth. Good evening and welcome to the Monday edition of The Money Show. I'm in for Stephen Grootes for the rest of the week as he gets a well-deserved rest. This week we have a lot of results to cover, especially on the JSE, and find out how the US standoff with Canada and Iran will play out on the global economy. Today, we start with Mpact, a company that makes paper and packaging in the country. We'll be talking to the CEO, Bruce Strong, about their latest results released today. The company having improved cash generation and lower debt levels at a time where there's a lot of pressure and weak demand in that industry. And then we talk to Advotech as well. They had the results come out. Advotech, of course, the owners of private schools, or some of the private school education companies in the country. They had better earnings of 16%. CEO Jeff White talks to that about that later. Then our market commentary covered by Arthur Karras, Old Mutual Investment Group representative there, talking to us about how the markets played out. The JSE coming in lower by 1,000 points today. We'll find out why from him. Then South African motor manufacturing, that industry facing a lot of job losses as local production, of course, falls. This time we're focusing on those that make parts in the industry and how they've been affected by traditional brands dropping their output in the country. Later on the show, just after 7, we look at how unpaid university fees are keeping graduates out of work. We'll be chatting to Spio Masugu, the head of marketing at Fundi. And then we always need our neighbors, and we'll tell you why South Africa needs its neighbor when it comes to agriculture, why Zimbabwe matters for South Africa's agriculture. That conversation with Wandile Sihlobo, chief economist at AgBiz. Then later, we talk our business book review, the Reverse Centaur's Guide to Life After AI. The author there is Cory Doctorow. Bronwyn Williams, though, trend translator and future finance specialist at Flux Trends, talks to us about that. Then we close off with our special Monday edition of How I Make My Money inside South Africa's digital revolution with Arthur Goldstuck. All that and more on The Money Show. Let's talk money.
The Money Show
on 702. Let's walk the talk.
On 92.7 or 106 FM and DSTV channel 856.
Some mixed results are coming through from Mpact. Then today, the JSE listed paper and plastics packaging company Mpact increasing its revenue for the 6 months to June by 1.1% year on year to 5.9 billion rand, essentially 6 billion rand, and declaring an interim dividend of 15 cents a share. We're joined now by CEO Bruce Strong. Bruce, welcome to The Money Show.
Thank you for having me, Motheo.
How would you measure up this particular period? Of course, there's been a lot of challenges in terms of the industries that you serve, in terms of retail, industrial. Has that impacted how you performed this particular period?
Yes, Motheo. So the period has been impacted by a number of macro sort of issues, but I think it's important to point out that the central story here behind these results is portfolio optimization across our business. Over the past several years, we've been reducing our exposure to products that cannot deliver sustainable returns or otherwise not sustainable. We focused on releasing capital from non-core assets and investing behind our competitive assets and growth sectors. One example that you mentioned in your intro around Zimbabwe, for example, and agriculture, but in South Africa, the fruit sector remains an important opportunity for us. And we've invested tremendously behind that, and that's showing great resilience, even with all the floods and that have come through. And we've also invested in our competitiveness in the areas where we are strong. So while the earnings were under pressure for the period, we did generate good cash. That improved materially. As you mentioned, our debt did reduce year on year by some 350 million rand. And our focus has shifted now from the execution of these various projects to returns. You would have seen in the results that we have closed our BM6 carton board paper machine in Springs in May. That had a big impact on the numbers, but that was in a very difficult sector which globally faces, complete overcapacity, about 5 million ton overcapacity. So it was clear to compete there, we wouldn't be able to do it for the foreseeable future. So we took that difficult decision. That follows in 2024, we sold our Versapack business, which was a styrene business, didn't make good margins. 2025 and 2024, we exited low value or low margin preforms. And at the same time, we've invested tremendously in our Mkhondo paper mill, where we are focused on the agri sector and specifically fruit packaging. We've invested in our bins and crates business, which is also producing goods for returnable transit packaging for fruit and other things. And we've also invested in our capabilities in the industrial sector to make sure we are globally competitive. So while it's a bit of a mixed bag for the half, there's still a number of projects that are really in time will deliver great value for the business.
The tough bit, as you say, was the closing of the Springs mill. Can you just explain for somebody who doesn't understand the business that you're in, why there was lost demand, particularly for that particular mill?
Yeah, so the Springs mill has two paper machines. One is called BM6 that makes carton board that's used for the likes of your cereal box or your biscuit box or your tea box. And the other machine makes core board, which is used for the core of paper reels. The best example is a toilet roll core, but I mean, that's a weak core, but we make paper that's used in high demand applications like paper reels. On that side of the carton board, the coated carton board that is used for biscuit boxes and cereal boxes and things like that, we found at the beginning of the year that we were some 25% more, our costs were 25% higher than what people were able to land that product for in South Africa because of overcapacity globally. And on that basis, even with the greatest will in the world, our customers were unable to support their continuing buying from BM6 because it was just uneconomical. And as a consequence, we've tried many times to get intervention from government in that regard, but it just wasn't enough. And so as a consequence, we had to close BM6. We're still running BM3 because we think we can still develop a good competitive business there. But sadly, we had to close BM6 just because of the global overcapacity and all those factors that I've mentioned.
It's been an interesting year, right? We come into 2026 after the tariffs that we saw in 2025, and I'm sure that would have hit your business a little bit. But then the situation on the Strait of Hormuz also happens. How does that broadly affect your business?
Well, when the war started in Iran, in the Middle East, and the Strait was closed, we saw polymer prices, which is a key input to make our plastic products. Those rose between 60 and 90%. And in one case, we were given like a week or two's notice about those price increases. So that was quite a scramble. But I must say, I'm really grateful for my colleagues and everybody in our business and our customers who responded very positively, under the circumstances to making sure that we were able to get the raw material. We were able to pass the costs on where we could and still manage a great improvement in our plastics businesses for the half. So they were up 5 times in profit in this half compared to last year, the same half. So while those challenges were there, I think my colleagues and in our industry, our customers and so on, did a great job to manage that, notwithstanding the challenges.
Mpact, always known for a great second half. Bruce, what forecasts are you putting forward?
So we still do expect the second half to be stronger than the first half, which is traditionally the case just because of seasonal demand. The economy is still tough, but we've got a number of areas where we are pretty optimistic, notwithstanding. So Mkhondo mill still needs to bring on the capacity of its sodium lignosulfonate product. That should ramp up a little bit more in the second half. And then in our bins and crates business, we should see a little bit more demand from the fruit sector in the second half, and the same in our corrugated business. We are going to the market for price increases in our paper manufacturing business for the fourth quarter. It might be difficult to get the levels that we need, but we do need price increases, so we're going to be out there getting those prices up. And hopefully all of those things together will give us a bit more, of a tailwind in the second half. But there's no doubt we're not relying on any market recovery to bring us an uplift.
Well, that was Bruce Strong, Mpact CEO, talking about the latest company print in terms of results. The growth in revenue was supported by higher volumes in paper manufacturing, the paper converting and plastic bins and crates as well, seeing a gross profit increasing by 3.1% to 2.3 billion rand. So a mixed bag of results, but a lot that is good to look forward to for Mpact for the rest of the year.
The Money Show
With Motheo Khoaripe
on 702. Let's walk the talk.
Whenever we report on car sales and how things are going for the automotive sector. It's almost hard to believe that things are looking bad for those that make parts, for those that are components of cars in the country, because of course sales are up, the likes of Toyota, VW, traditional brands seeing new car sales go up, but also for those that are entry level in South Africa, the Indian brands like Mahindra and the many Chinese brands that have joined the shop floor have sort of made the industry more robust and better choices for consumers when it comes to picking out a car. But things are not looking as good on the manufacturing floor, especially for those that make parts and components. We're now going to get into a conversation with Nduduzo Chala, the National Association of Automotive Component and Allied Manufacturers, Chief Operating Officer, just to talk to us about some of the challenges they're facing as the face of automotive manufacturing changes in South Africa. Nduduzo, welcome to The Money Show.
Greetings, Motheo, and greetings to the listeners as well. Thank you for having us.
There is that stark contrast, right? New vehicle sales looking up, NAMSA reporting great sales, and consumers, even through the tough economy, finding a way to buy new cars. But for those that make parts and components in the country, things aren't looking as, bloomy or looking as good. Why is that?
Motheo, I think firstly, if we understand that the car market and the results that we get from NAMSA on a monthly basis, that's a combination of both local producers and importers. So over time, we have seen, I think, the imports coming far more stronger than what the sales are for local manufacturers. So I think the last time, beginning or let's say second half of the year, we were trading for local car sales below, 40%, so about 37 odd percent, 35 odd percent. So the majority of the sales are more the imported materials. So that has then a knock-on effect on the local component manufacturers, because we're not selling as much local product, and our product goes majority on the local products, and then hence the knock-on, and I think some of the strifes that we say as the local component manufacturers.
Now, you're an industry representative for the automotive component manufacturers. You've spoken to government, the Department of Trade, Industry and Competition, describing the component sector specifically as being in structural decline. Can you talk to us about some of maybe the plants that have closed down and companies that have flagged that they're in trouble?
So thanks for that, Motheo. I think over the last 3 years, we've tracked and noted around 15 businesses that have closed in the component sector. And I think we have quantified the number of jobs that have been lost as a result to about 7.5 thousand. And I think there's a number of issues that are contributors to that. Firstly, the declining localization. So I think as one of the ambits or objectives of the master plan, South African Automotive Master Plan, it's the ambition to reach a local content of 60%. So I think to about COVID, we were around 42%, but that has stagnated to below 38.5% in 2025. Again, I think that is because of production volumes that have not grown in a South African context. When I say volumes, again, I repeat, it's the local volumes that we're talking about.
Yeah.
And it has then the ripple effect of what we feel as a component manufacturer. In 2024, for argument's sake, I think NAMSA released to say they'll be producing 711,000 units in 2025, but I think we saw about 618. So what that does is that as a component manufacturer, you gear up for the 700 odd thousand vehicles as a production. So you gear up in terms of machinery capacity and also resources from a skill perspective. So when we don't see or realize that's how 711 units, it then sort of has a challenge on the business case and sustainability of maintaining the machinery that you run, maintaining, let's say, the shift pattern that you would have ramped up in order to supply the 711. And that's where the challenges are. And lastly, I think from a policy shortcomings, our current APDP2 and the discussions we've been having with the DTI CEO government is that it's miscalibrated in essence, in that it's driving more import sales or more imports into the country at the detriment of local production.
So are we still finding ourselves in a position where the parts made in South Africa are still more expensive than those imported?
I think that is a conversation of saying, are we probably better priced or competitive compared to China? And I think we've been down the discussion of saying we will never be in a competitive state as a China, which has a 1.3, 1.4 million population in terms of scale.
Yeah, what I'm pointing to is it a matter of policy protection for those that make parts in South Africa?
So it's a miscalibration, Motheo, of the policy to say the OEMs generate far more credits which they can utilize to offset the tariffs or duties of the products that they bring into the country.
Okay.
And what then that creates is that they then sell the excess credits to the importers, who then gain an advantage over the local manufacturers and also component manufacturers. And that creates the disparity of then the competitiveness. And that's why we say the APDP2 currently is misaligned, because it's pushing and allowing for more of those credits to be sold, and importers then gain that, advantage compared to us as local manufacturers.
All right, that was Nduduzo Chala, Naacam Chief Operating Officer, saying the Automotive Production and Development Program Phase 2 from government really needs to be worked on in order to protect those manufacturing parts in the country.
The Money Show.
The markets.
Still a lot of cautious trade on the market. Of course, the US having a double standoff, if you will, with Canada and also with Iran, promising them those hefty sanctions. That's, I think, played into the markets a little bit today, with European markets quite weak and also the US markets opening quite weak as well. Arthur Karras, portfolio manager at Macro Solutions at Old Mutual, joins us now for the markets. Arthur, just the broader look at the markets. Is it mainly the US that's the culprit for all this weakness?
That's definitely part of it. I think it's worthwhile bearing in mind that while we've had a down day today, we've really, really good month to date, with the capital share up nearly 5%. So as long as you've had lots of gold and platinum shares in your portfolio, you've had a good month so far. But I think it's more than just the US, and the primary thing there is really interest rates in the US heading higher, their debt hitting a new record high, and the competition for fresh capital globally is heating up. So a lot of governments need more money. We've got the AI companies looking to borrow more money and looking to raise more equity capital. And now with the US looking like they're going to need ever more money to fund their deficit, it's just nudging interest rates up. And that tends to make people nervous about equity markets.
Not the greatest of starts for the JSE today, down 1,000 points. A lot of those retailers on the bottom 10 of the top 100. Mr. Price down 5%. Pick and Pay down 3%. Clicks was down 3.9%. Pepco and the Foschini Group also in that column there. So a lot of drag then on the local market.
I think that if you look at you've mentioned a lot of the retailers there, and we've had trading updates, I think, from almost all of them in the last couple of weeks, and they're all pointing out that the market is tough, that volumes are soft, and if we look at the macro factors that could drive that, we're really not expecting any meaningful decline in interest rates. In fact, we're concerned that we might have to see interest rates go up if inflation doesn't stay under control. We've had the impact of the twin pot retirement system coming in a year ago, so that's not going to be a positive driving it. So we're really just looking at those SA consumer stocks and saying we don't see the catalyst for it. What's going to make these stocks perform better? And I think in that kind of an environment, people are just loath to bid these prices up, even though a lot of these shares are really, really cheap by historical standards.
Are we seeing the Rand break 15 this week, or am I too ambitious?
No, I think that that's a good question, and one that I really won't try and answer, but I would draw that back to the US. So this has got a lot more to do with weak dollar. So all currencies have strengthened relative to the dollar in the last couple of weeks. Against the euro, looking a bit better, but certainly not as strong there. So this is really about the inflation gap between ourselves and the US looking a little narrower than what it was. And while we might not always remember it, our financial situation here in South Africa as a country has gotten a little bit better, whereas in the US it's gotten a little bit worse. So that tends to work out in favor of our currency. Gold price also helps. Platinum price also helps when those precious metals prices go up. We know that there's going to be more taxes paid by those companies, and it's going to make the fiscus look a bit stronger.
All right, a thorough look at the markets. Arthur Karras, their portfolio manager at Macro Solutions at Old Mutual. The rand 16.02 against the US dollar, backed by those commodities at $4,654 an ounce. That was gold. Platinum also up more than 0.5%, pushing up the local unit, the rand.
The Money Show with Motheo Khoaripe
On 702.
702.
We continue to talk results here on The Money Show, now talking about Advotech, one of the providers of private education in South Africa. If you're a parent listening in traffic, or maybe you're at home listening into The Money Show, and you're always complaining about the high fees that we have to pay for our kids to go to school, I have a bit of a solution for you. Maybe you could invest in companies like Advotech, because they declared a gross interim dividend of 53 cents per share, an 18% surge for the half year, for the 6 months ended in June. And we're going to be talking to them now about their results. Advotech posting a 16% jump in interim headline earnings per share, supported by what they say is sustained enrollment growth, fee adjustments during the period, and enhanced data management. The private education provider's latest results showing that the group's tertiary education or university division led growth with a 17% jump. Of course, Advotech operating institutions like Crawford International, Trinity House, Pinnacle, and Abbott's College. We're joined by CEO Jeff White to just go through some of those results. Welcome to The Money Show, Jeff.
Good evening.
Looking at this particular period, obviously you've gone through registrations and half of the year. What are things looking like in terms of, the demand for education, especially private education for your industry?
Overall, our enrollments were up 13% year on year, which is extremely strong. We had solid growth in the schools division with 5%, but the real standout is the tertiary business, which is Emirates and Vega, alongside Rosebank International, and there we were up 19%. So that's really the bedrock for these results.
Then looking in some of the things that you've invested in, you've made a few acquisitions, in Kenya and Namibia as well. How are those playing out this particular period?
Yeah, we're not quite in Namibia yet, but we do have a sizable business in Kenya, in Ethiopia, and Botswana. And we've just opened a university in Ghana, in Accra. So we continue to invest in creating capacity across those African countries. The big investment there is expanding in Ghana. So we're about to double our capacity there. We were also in the process of fitting out a new school in Ethiopia that will give us room for another 450 learners. And we are also about to double capacity at one of the schools in Makini, and that's State House in Nairobi, where we're fully redeveloping the site. So we are working hard to expand capacity to meet market demand.
You're also going to consolidate your brand portfolio. What will that mean for the current schools that you have?
Well, I think we've already been through a process of consolidating our tertiary structure, effectively moving from 6 degree awarding brands to 2, those being Emirates and Rosebank International. So we're now following the same rationalization path for our schools portfolio. And the primary driver here is that it's very inefficient to operate and market lots of single school brands. So we're in the process of consolidating Flipper in Ethiopia, the Gaborone International School in Botswana, and Makini in Kenya to the newly created International Schools Group brand. Then in South Africa, we are moving South Downs under Crawford, Glenwood House and Tiger Valley under Trinity House, and Peakenwood, Glenwood Bay, and Charterhouse under Pinnacle. So that will drive a lot of operational efficiency, marketing efficiency, and it will also create greater scale in our flagship brands.
You also have a healthy war chest in terms of your capital expenditure reaching 403 million. What key projects are you focusing on into 2027?
Well, they're mostly around capacity expansion. So we opened a couple of new Emirates campuses this year. The one in Santon on Greyston Drive doubled our capacity from the previous sites to 9,000. We've also built a brand new campus in Nelson Mandela Bay. That's added 50% capacity there to around 4,500. We are about to break ground on a new mega campus for both Emirates and Vega at Cornubia near Umhlanga and KZN. That should open in 2029 with a capacity north of 10,000. We're busy expanding the Rosebank Braamfontein site. We're also going to add some new buildings, which will increase capacity there by around 9,000 in total. We're relocating Rosebank in Durban, which will also more than double capacity there. And we've added 2 new buildings in Polokwane, taking our capacity from just short of 1,000 to 4,500. So we're very busy building capacity to meet market demand.
Do you feel it's a bit of a race against time to improve that capacity because there's such great demand, especially for private education in the country?
Well, it is quite difficult when you get the kind of growth that we've been delivering. So we are trying very hard to stay ahead of the curve. But the acceleration in enrollments, particularly in the last 2 years, has been quite hard to accommodate. But we have a world-class property team, and working with the brands, we're managing to stay ahead of the game.
And before I let you go, Jeff, looking at how tough the economy has been, and I'm sure any consumer will tell you one of the biggest worries they have in their budget is that school fees, whether it's tertiary or high school or primary school. Are you finding that parents are keeping up with the fee payments given the tough economy?
Yeah, no, there's no doubt that things are tough out there. We like to grow through enrollments, and enrollments depend on having great brand promises that we deliver at affordable prices. So we tend to take increases that are as low as possible, usually in line with or even below inflation. And if you look at our debtors performance, it's actually improved year on year. So we've centralized debt collection, and that's allowing us to take a very structured and professional approach. And I think we've also had a change in philosophy. We've moved from debt collection to looking at customer service, where we work with parents to help them pay school fees. And we have various mechanics that we use there, depending on whether parents' financial challenges are long or short term. And we also spend north of 300 million rand a year on bursaries across the schools and tertiary divisions to help people that are under pressure.
Jeff, thank you very much for chatting to us tonight. Advertech CEO there, Jeff White. Talking about the results for private education firm Advertech, looking at the half-year group operating profits grew 14% to 1.1 billion rand, lifting its operating margin from 21% to 22%. The growth underpinned by brand consolidation that the CEO was chatting to us about there. The group revenue at the company increasing 8% over 5 billion rand. And my big idea, invest in some of these companies so that you get some of those fees back as parents, because every other conversation you have over coffee at work or anywhere else, people will tell you those fees are quite high.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud to support Gensa Energy's investment in the infrastructure powering West Africa's growth.
Welcome back to the Money Show. Now talking about why we should just have good relations with our neighbors, right? When it comes to agriculture, Wandile Sihlobo, Chief Economist at AgBizna, joining us now for this conversation on the importance of Zimbabwe as an export destination for South African agriculture. I guess when we talk about exports, we look to markets in Europe or maybe the Middle East and never really look and think about our neighbors when moving some of that crop. Wandile, joining us here on the Money Show. Good evening to you.
Thanks for having me on.
A market we often overlook, but one that's very important to South African agriculture. Just how hefty is Zimbabwe's play when it comes to exports?
I think, Motheo, it's just in the way you're framing it, it's very important because you typically hear this amongst us South Africans, people saying, oh, we are feeding and helping Zimbabwe. In a way, it may seem in that way, but this is commerce. And Zimbabwe is actually a major and important trading partner. What we send, for example, to Zimbabwe a year on agriculture is worth about 1.2 billion US dollars. That's what Zimbabwe pays South African agricultural entities. You think about that, Motheo, and you compare with what we export to the BRICS countries. That's slightly higher than what we send to the original BRICS countries, and even slightly higher than what we send to the Middle East. But you would judge from the general conversation that perhaps maybe the BRICS countries, Middle East and the others, they tend to get a more favorable terms in terms of commentary about this relative to our neighbors. And I think for me, which was a point I was to say, let's manage the relations with our neighbors, be careful of the narrative, but at the same time, of course, not taking the foot off the brake in thinking about diversifying in other areas. But this is an important region for our prosperity as agriculture.
And one would ask the question, what are those products that we're sending to Zimbabwe? Because $1.2 billion is nothing to scoff at.
No, it's nothing to scoff at. I mean, we send also a range of products. When you look at the basket, you will see that there's maize, soybeans, a lot of processed food products, even bottled water, soybean oil, various seasonings and spices, animal feed, fruit juices. So it's a range of products like that. And I think perhaps even in terms of then the exports composition, they do differ to what we send in the EU. Because, I mean, if you look at the basket of products that South Africa exports to the EU, it will largely be fruit and wine. In the Middle East, it will be fruit, grains, red meat. So there are those differences. But I think for those that have a huge value addition, you'll see that Zimbabwe is a key market. And I would say this, Motheo, also, if you look just generally in the rankings of saying what are the biggest markets of South Africa in agriculture, the number one country is the Netherlands. But the key thing to know about the Netherlands is the fact that also they are a distributing port for much of the things that are going to the EU. So you could make a case that Zimbabwe is a single standing big market that is in there. But I think those composition, to your point about what products, they do differ. So we send a lot of processed stuff across our borders.
And I gather it's not a fair exchange then. My question being that we perhaps export more than they send here in terms of product. Is that a fair judgment?
No, it's a fair judgment, but they need here now to do something themselves in there. Because, I mean, Motheo, look at the numbers. You'll agree with me. Just last year, for example, Zimbabwe exported to the world in the agricultural products about $1.6 billion. So that's almost equal to what we exported to them.
Yes.
And in terms of the markets, then, of course, as South Africa, we remain their second largest market also, but not in the same value because we only bought about $200 million worth of agricultural products. But they will need to make sure that they improve agricultural productivity there so that the regional value chains and all of these things are more robust. Because when I look at what we bought, it was a couple of fruits. And you see when you go to some of these major retailers in South Africa, there's blueberries from Zimbabwe and certain fruits, tobacco, spices, tea, things like that. And I think the whole discussion, for example, Motheo, that was taking place on Friday between South Africa and Zimbabwe on a biannual business commission of regional value chains is something that has to be built on this to say, okay, things are looking this way, but what technologies can we send to them to boost productivity? Yeah,
and I think that's quite important given that, I mean, let's not forget this is the breadbasket, of this continent, and it just needs that push. It just needs that infrastructure, that investment to get it there again. Also quite important for food security.
Yeah, I would say South Africa now is breadbasket, but then, of course, regionally, we can all be a breadbasket of making sure that Zimbabwe does its part. I mean, I'm talking a lot about them today because even if you look at their agricultural sector as a share of their overall economy, it's about 10%, which means then if they increase productivity there, employ more people. There will be a lot of positive spin-offs on getting their economy right. But let's also, though, not try, to talk their book up. There's a lot of things that they need to do with improving their own land governance and their own domestic policies so that there is credibility and predictability, and also iron up some of their political economy problems, which make people not be involved in there. Because part of this also links to the land reform processes of the early 2000s. So those are some of the things that many that had invested in Zimbabwe went through painful processes. And I think that the Zimbabwean government will have to fix those things, thereafter develop a strong positive narrative about their reforms that will build confidence. Because in our view now, we are not seeing that happening.
And it's a key relationship, especially for the SADC region. Wandile Sihlobo, chief economist at AgBiz, talking to us there about the importance of Zimbabwe, especially for South African agriculture as an export market. South Africa exporting around $1.2 billion in agricultural products to Zimbabwe in 2025, making it one of the country's most important export destinations.
And now, The Money Show with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud to support Gensa Energy's investment in the infrastructure powering West Africa's growth. It's just after 7 here on The Money Show, just touching up on some of the stories that came through on the market today. Tiles sales remaining quite flat as weak consumer spending and intense competition, as well as cheaper imported tiles weighed on performance. Revenue was unchanged at 11.3 billion rand for the year to June. The company is saying that perhaps duties into the particular industry could help them with the likes of cheaper imported tiles that make it quite tough in this industry. Sales volumes came under pressure despite average selling prices rising by 1.8%. Total welcomed provisional anti-dumping duties on certain imported ceramic and porcelain tiles from India, Mozambique, Zambia, and Zimbabwe. The company expects the duties to ease pressure from cheap imports once existing excess stock in the market has been sold. Now, Total remains cautious, though, as consumers cut back and competition stays intense. A lot of households are not doing renovations and looking into things that could be eating away at their budgets. And then earlier on, we had Mpact results. They had quite mixed results over the period, saying they looked at a challenging first half of the year with headline earnings per share also shaving away some of those perhaps the earnings they wanted to see for the year. But there appears to be some positives beneath the headline numbers. Cash generated from operations up 400 million rand, with increasing earnings expected in the second quarter. And then Avenge came through with their set of results as well. Avenge returning to an operating profit as it continues to stabilize the business, while Fraser Wiley is set to become CEO from the 1st of October this year. Operating earnings at the company improving to 221 million rand from 693 million in terms of losses last year. Avenge also continuing to deal with losses and extra costs from several older projects, including Kingston. The group is also exiting Southeast Asia and working to resolve remaining historical issues in its Africa business. And on the international front, still that push and pull between the US and Canada. President Donald Trump saying the US will raise tariffs on imports of cars, trucks, and auto parts from Canada to 50% from the 1st of January 2027. So we can already look forward to a very tough year into 2027 with those tariffs up 50% for Canada. Trump's latest tariff threat would double the top line US tariffs on Canadian auto parts that are currently at around 25%. Canada sought to lower auto tariffs as part of a new trade deal with the US over the weekend. But of course, that fell through. Both countries saying they're not willing to come to the negotiation table at the moment. The US accusing Canada of treating itself as a US state, while Canada saying they will face the US dollar for dollar. So whatever they're imposing in terms of tariffs, Canada will do the same. Well, on Saturday, the US imposing 50% tariffs on about $20 billion of Canadian goods. This including things like wine, cement, things like hockey sticks. Those duties are imposed in retaliation for alleged Canadian trade discrimination against US cars, alcohol, and dairy. You'll remember when this tenure started for President Donald Trump, Canada hit back with their own tariffs, pulling away things like bourbon and US wine from their shelves, hitting that particular industry north of $300 million in terms of losses for liquor operators from the US who couldn't sell their liquor in Canada. Well, it seems the neighbors not so neighborly at the moment, and no deal on the table in terms of the trading front.
The Money Show.
Business books.
Looking at a very interesting book this evening, talking about AI, the positive things that come with AI, and perhaps some of the negative ones that come with AI. Bronwyn Williams, trend translator and future finance specialist at Flux Trends, reading with us tonight the Reverse Centaur's Guide to Life After AI, that particular book by Cory Doctorow. Welcome again to the Money Show, Bronwyn. It's been a big conversation on the markets, especially when it come to talk about AI and the chip makers and everyone making their billions and collecting their money, but also others having murmurs about the real value of having artificial intelligence. Will it live up to the hype? What does this particular book challenge when it comes to artificial intelligence?
Yeah, so well, I have to say I do like the book because it echoes quite a lot of my own thoughts when it comes to AI, that there's an awful lot of incentive in the marketplace at the moment, which is the thesis that the author goes in with, to get us to believe that this technology is more powerful than it even is, right? So if we can believe, and here's sort of economic thesis, if we as customers, as consumers believe that artificial intelligence has infinite upside, could become super intelligent or sentient or could entirely disrupt the world, well, that's what keeps driving the prices of growth stocks higher, right? Because growth stock, by definition, is belief that the stock in this company can go up. So, of course, all the tech companies are incentivized for us to believe that this technology is superhuman and incredibly powerful, because that gives potential for upside. Likewise, the academics and the AI ethicists and the futurists like myself also, of course, make money from leaning into the hype. So this book is about pulling out some of the hype that's going on and thinking a bit more seriously about those incentives that are involved and what is possible and what is not possible. And more than that, the other part of the book is about what is desirable and what is not desirable here. And here again, after we've got the first point, which is there are incentives to hyperbole, incentives to over-exaggeration, we have to have as a proviso. The other point is we need to understand what is technology doing what to, and what is technology doing what for. In other words, who is technology doing things to, and who is technology doing things for? So it encourages us to understand the power dynamics between these powerful technologies, where they are in fact true, once we've separated the hype, from the ethics thereof, and of course our relationship to how the power is distributed through these systems. Because by interrogating that, we as workers, as citizens, as capital, as labor, however we want to categorize ourselves, can situate ourselves within that power dynamic and advocate for what it is that we want.
But Bronwyn, when we talk about centaurs here, we're not talking about half man, half animal, right? The centaur in this particular...
Right? I mean, we talk about all the time, like all the HR people and the tech people get on stages and talk about, they'll talk about like, we're going to be cyborg workers, right? So a centaur is just this author's way of describing that exact same thing.
Half man, half machine.
Making it a little bit more visceral, right? and he uses the metaphor of the reverse centaur to talk about technology when it is, like I said earlier, doing things to us as opposed to when it's doing things for us. So the centaur is like this magnificent fictional beast for all your lady listeners out there who are into romantasy. The centaur is like a sexual, strong, dynamic figure. It is desirable. whereas the reverse centaur is opposite to a centaur. Instead of being a horse, a strong, sturdy horse with a smart man's head, the reverse centaur has a skinny human male bottom and a dumb horse's head, right? So here in the metaphor, the horse is artificial intelligence. Are we riding it, or is it riding us?
So is it a matter of us then using this particular technology to advance? I think that's the question being asked here, instead of waiting for the technology to assist us and we being brain dead, for lack of a better description.
Yeah, but it's more subtle than that, because it's not just, is it overall going to move technological progress forward? It's also asking, who is that progress for, and is it progress that we want? The other future assumption you've had on the show before locally, Craig Wing, also often quotes about how, just because we can do something doesn't mean we necessarily should. And even if that should is good for some people, is it good for everyone? And that's quite a powerful question, because we don't have to do any of this stuff. Another one of those things that is told to us about technology all the time is its inevitability, right? That it's going to happen. But it's going to happen if we choose to make it happen, if we choose investors to invest in it, if we choose as employers to deploy it, if we choose as companies to unleash it onto the world. I mean, we all know about the tech companies who have unleashed faulty models that can do all sorts of untold damage. That was a choice. That didn't have to happen, right?
But I think we're at a point where, profit is almost like, having one stronger arm over the sensibility and the ethics of using such technologies. I think a lot of companies very quickly want to release some of these models without properly testing. Who cares if you're making billions, right?
Oh, but there's even more incentive. There's incentive to release the faulty model, because then you can claim it has hallucinated, which is a terrible word for error. You didn't program it right. It has hallucinated and jumped out of the model, which feeds into the mysticism. And if they can get people to believe that this technology is sentient and super intelligent and omniscient and omnipotent, we can sort of suspend our disbelief and just fall in line, right? Just believe. Don't ask too many questions. So ironically, releasing faulty models actually feeds into that science fiction narrative, which is driving so much of the market value and the fear. Both the fear and greed is perpetuated by the sensationalism around what really is, and let's not discount it. I'm not discounting this is powerful, useful, functional technology, but it is powerful, useful, functional technology that is perhaps oversold in some cases, but also is under-considered where it really is powerful as to the benefits and wisdom of deploying it.
Investment bankers claiming that AI will be worth more than $16 trillion, a number that could only make sense if AI lives up to the hype, right? And then we have to ask the question in terms of themes anyway. What happens to human labor? What happens to the hands, the skills that used to put things together on the showroom floor and the manufacturing floor? Is it a world where we just press the button and the machine does everything?
Well, you asked the question, what's happening to labor? Well, it's already happened. Quite a lot of labor has lost its job to technology, not because the technology has actually replaced the worker in the worker's chair doing what the worker used to do, but rather because the technology has displaced the capital that used to be invested in human talent is now invested in technology. So if you have finite resources, and even in a world of quantitative easing and, dollar to the moon, most companies still operate with some sort of physical gravity. When there's limited constraints, are you betting on investing on the human being, or are you throwing your dice into the growth at all costs, growth market promise, right, of technology? And we've seen companies that have overinvested in undercooked technology, sold on potential or kinetic energy, as I like to say, or potential energy rather than kinetic energy. They bought the potential, deployed it for kinetic solutions and didn't really live up to promise, but now you've got a deficit on the balance sheet, and where do you cut? You cut investment in human capital and human capital itself. This is already this is a fact. This is not like a future speculation. This has happened in many places. And then, of course, there's the speculation of what happens later. Does technological advancement displace labor? Is there a lag effect? Is it a frictional effect where in the short term we got to reskill, learn new jobs, move into new careers, and there's disruption? Of course, that also translates to real human pain. People not being able to pay their mortgage or send their kids to school. This is a real cost, even in the short term. But at least then the promises on the other side is a greater plateau or new equilibrium of a more advanced, economic development, right? At least that's the some sort of character. Or is the possibility that we are all displaced by super intelligent technology? And I would contend there's probably something in between all those different views that actually plays out. But the extremes of what we need to guard against, the extremes of both fear and greed, are what drive us to make decisions with real pain in the present and in the future. So I think the overall message is to desensationalize our conversations around technology
AI.
Progress.
The author there, Cory Doctorow, writing the book, The Reverse Centaur's Guide to Life After AI, asking quite critical question that, yes, it is a great technology. We can do voice to text and do all sorts of other cool things that advances as humans, but also there is an ethical bit of what happens to the world and the human ability when the machines take over. Bronwyn Williams there taking us through that fantastic book. If you'd like to pick it up, it's called The Reverse Centaur's Guide to Life After AI. The author there, Cory Doctorow. Thank you so much to our Trends translator.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Local government body SALGA looking to nip things in the bud when it comes to the leakage that happens at municipalities, saying consultants could help to fix almost 5 billion rand in municipal debt. We're now joined by Wayne Duvenage, the outer CEO. Wayne, is it a matter of skill that needs to be added or a matter of a system that just doesn't want to do the work?
I think it's a combination of both, but largely skill. I think we'd find in many failing municipalities there has been a dearth of the skills required to manage the finances. We see this in the Auditor General's reports, and we see this due to political interference so often that the people that are not fit for the roles are appointed. And this whole cadre deployment problem exacerbates things, and so we sit with many failing municipalities. And I think SALGA, which is, as it says, South African Local Government Association, part of their vision and mandate is to help professionalize and fix and make municipalities run efficiently. And we know they're not. So their move here is probably long overdue because the municipalities pay them quite a lot of money. It's a voluntary payment, but they earn a good 500 million a year. And I think they're probably questioning themselves, or the municipalities have said, we need more help in this regard. And that's probably what's triggered this action from themselves.
And Wayne, as much as we agree that leakage has to stop, right? That leakage of 500 billion rand, but consultants also don't come cheap.
Yeah, they don't. And, the Auditor General points this out. There are many consultants they use, a lot of them finance consultants, trying to help them fix their financials. But, if you can't do the work properly, if you can't ensure that your procurement is done at best cost and quality to the municipality, along with ensuring the job is done, the quality of the job is at expected specifications and so forth, well, then it's money wasted. So it's a number of things, Motheo, but it comes down to you actually shouldn't have to have this intervention because municipality's role is to run the city and town on behalf of its residents. And that's why you appoint city managers. That's why you have the councils. And yet we've just seen this backward slide for the last 2 decades now. And everybody's been talking about this, but nothing's really been done. I'm not sure whether the SALGA intervention is going to help because, as you say, it's money, and I think SALGA seems like it's going to fit the bill.
Yeah,
the
SALGA
problem is
making them know.
Is the municipality going to accept that help, though? That's the big question.
making the note that many municipalities continue to collect less than 70% of billed revenue. So clearly people who are in the know, who can crunch the numbers, who can do this revenue collection should be appointed to these municipalities. But it's hard then to pull professionals from South Africa's robust banking sector. Even those running their own businesses in a very healthy financial sector wouldn't be too attracted by what is happening in our local municipalities. So how do you get that talent to then turn to almost a national duty of working at municipalities?
Yeah, that's the exact challenge they're going to have. Many of these municipalities are in rural areas, far away from where people prefer to stay and live, so that you can't fix these problems remotely. You've got to get into these cities and towns. You've got to have a look at exactly what's happening. So it's not remote working, or most of it won't be. And yeah, I think it's going to be a big challenge for Salga to find the talent and the necessary talent, by the way. It's not just you have a qualification, an accounting qualification, and off you go. You've got to understand the dynamics that play out in running municipalities and ensuring that the procurement systems aren't manipulated. That's the biggest challenge I think they're going to find. And then how do they get in the way? Because we see many financial people in these municipalities pushed aside because they start to spot the irregularities and then they've raised the flag. And what happens? They lose their jobs. Sometimes they lose their lives.
Yeah, Wayne, I think let's also say the quiet part out loud. A lot of the people working in municipalities come from parties, and some of them are handed these positions without the necessary knowledge to do the job. Is it better then to look at, hiring people that can actually do the job and stopping the South African systems where people from parties come and fill the positions?
Well, that's one of the biggest problems we have in local government and national government, provincial, across the board. This catered deployment attitude of jobs for pals, jobs for is this nepotism problem, cronyism. It's about party first and citizens or country second, and that has got in the way of so much of what's gone wrong, or created so much of what's gone wrong today, and that's why many municipalities are failing. I'm not sure if this is going to be the panacea or the silver bullet that's going to fix them, because there has to be a will from the municipality side. We don't see that coming quickly.
All right, that was Wayne Duvenage, Outer CEO. There must be a will and a way to have a lot of skilled labor joining municipalities to make sure that we nip that particular leakage of 500 billion rand of municipal debt in the bud.
The Money Show. How I make my money.
Getting into the pockets of one Arthur Goldstock, founder of Worldwide Works, and how I make my money. One of my favorite features here on The Money Show. Of course, a man known for various books. I think he's penned about 21 of them. ICT Journalist of the Year for long years. He's been there. He's done that. He's seen the technology advancements that happen not only in South Africa, but the rest of the world. And he still gets front row seats to every advancement that is announced in our media. Arthur, welcome to The Money Show.
Thank you, Motheo. It's good to be chatting with you.
Look, you might say you've had gray hairs covering technology and technology stories all throughout the years. But let's roll it back maybe to the .com generation. Did you ever think you'd be somebody, making sure that we know the latest in technology, but also penning books to explain this to people, this changing world?
Let's say I didn't realize it would carry on for so long. I didn't realize how many revolutions I would have a front row seat to. So you could say that I was very fortunate to be in the right place at the right time, and again the right time, and again the right time. So time and again. So very fortunate, but very privileged as well to have witnessed all of this. And I guess the context is that I always was ready for the future, for all the different kinds of futures. So when I saw it start arriving, I had a good sense of what was happening.
Did you always have an interest in computers and things like the internet and what's going to happen next?
It really began as a child, growing up in a very small village in the southern Free State, where there was a small public library that had one row of science fiction books on its shelves. And I read all of those books by the time I was 10, and I dreamed of a future in which these science fiction visions were reality. So the idea of computers and what would become the internet was almost part of my thinking from a very young age. I didn't know there would be such a thing as the internet, but there was certainly this concept of global computers that were interconnected. And later on, there was a brilliant novel called Neuromancer by William Gibson. And this was already once I started my career, but it solidified the idea of the internet. And it actually coined the term cyberspace. And this was in the 1980s, long before the internet as we knew it came along, and before anyone called it cyberspace. And that, in fact, still has a good few decades of futuristic vision running through it, because it looks forward to a time when our brains are actually plugged into the internet. But it also solidified the concept of the internet. So all of these visions were part of my vocabulary. It wasn't a fact of being taken by surprise.
You were already an avid reader around the subject.
Yes. The only surprise is how fast some of it happened, like AI.
Your latest book, of course, is around AI as well, and it's something you've covered extensively, The Hitchhiker's Guide to AI, and I think it happened at a time in 2024 where that's all you heard: artificial intelligence, chip components, all sorts of things happening. And as our heads were turning and we were trying to make sense of it, you came through with that book. But your first book was The Rabbit in the Thorn Tree. Was that about technology, or was that just stories that you wanted to share?
Now, that was about urban legends, or what is often called modern mythology. But the concept of urban legends today is quite well known. Back then, it was completely fresh and new. And writing about it immediately gave me an image of exploring what lay behind the facts or the truth that people could see and the beliefs that people had. So it extended into technology as well, because technology was very much a mystical area in those days. It was mystified on purpose by the big technology companies who knew they could sell technology at a much higher price if it was mystified. So my job was to demystify that. But that demystification began with urban legends. And then my third urban legend book was at the time of the 1994 elections, when there was a flood of urban legends emerging around the elections. And I thought, what a great topic for a new urban legends book. My first two urban legend books had been bestsellers in South Africa. So I wrote a book called The Ink in the Porridge. And at that stage, the internet had just begun emerging, not as this visual user interface that it is today as far as the web is concerned, but if you could access things like electronic bulletin boards and text-based services. And there was something called Usenet, which consisted of what are called news groups. And these were discussion forums. You had to access it through a modem and specialized software, multiple pieces of specialized software that you had to put together. And I used those news groups to explore global versions of the election urban legends we were hearing in South Africa. I was able to show through that this was a global phenomenon, and many of our urban legends around the elections were variations on what had been known for decades around the world. And that wouldn't have been possible without this new thing called the internet. So when I wrote the book, the opening chapter began with a section titled How the Internet Wrote My Book. And this, of course, as I say, was when most people hadn't heard of the internet.
And before ChatGPT writing things for you.
Oh, long before. But I was approached by a publisher then who, in fact, I was approached by a journalist working for the Sunday Times who did an interview with me. And the interview was titled How the Internet Wrote My Book. And then a publisher saw that and approached me to write a guide to the internet. And from there, things just took off.
Now, you, a young man from Tromsburg in Free State, not an area best known for its technological advancements. So this little world, I guess, that you led to into technology, you would say was created and led by the literary books that you read?
Yes, very much so. There were the science fiction greats like Isaac Asimov and Ray Bradbury and Arthur C. Clarke and Robert Heinlein. Those were like the gods of science fiction. And especially Arthur C. Clarke was also a scientific genius. He, in fact, came up with a concept of radar during the communication satellites during the Second World War. He didn't invent communication satellites, but he laid out the idea for it. And he showed how a science fiction vision could become a scientific reality. So it was those kind of writers. They had a very strong grounding in real science, but they were also great storytellers. And then there was a second generation after that who got into the mind and how the human being of the future might think and behave. And they played with the nature of reality. So authors like Philip K. Dick and Harlan Ellison, and then you had William Gibson with Neuromancer, and Neil Stephenson, who wrote Snow Crash, which is a book that solidified the concept of the meme. What we call a meme today, in fact, emerged from Snow Crash. And the other thing that Neil Stephenson coined in Snow Crash was the metaverse. The concept of the metaverse was unknown. The idea of a world that you could explore through virtual reality. And when Meta, that was what used to be Facebook, when they changed their name to Meta a few years ago, it was because they thought the metaverse was going to become the next big thing. It never was. It was never going to be. You could tell, especially if you'd been reading these science fiction books. But they just latched onto that word.
Yeah.
But it came out of that book by Neil Stephenson. So all of these great science fiction writers, in fact, did presage the future.
Would you say you were an author turned journalist or journalist turned author? And how much did that type of content or beat pay in those days? Because I would imagine someone writing on crime, politics would have been more revered.
Well, I had a lot of passions, but none of them paid much. I wanted to be a writer from when I was, I think, 6 years old. And when I was in high school, in fact, when I was finishing school, I told my parents I was going to become a journalist. And they had sleepless nights because they believed that journalists could make a living.
Mine did too, Arthur. Mine did too.
I guess all us journalists. And the first time that my mother accepted that I could actually make a living from it was when we went into exclusive books in Hyde Park, where I used to pop in to see the bestsellers list, because they used to publish a weekly bestsellers list, and Rabbit in the Thorn Tree had come out a month or two before. And she was visiting me in Johannesburg from Tromsburg, and we went into exclusive books, and there was the latest bestsellers list that had just been put up on the counter, and there was Rabbit in the Thorn Tree at number 1. And she started crying because she said that was the first time she realized that I could actually make a living from being a writer and a journalist.
Look, Mom, I made it.
Exactly that.
You then went into Worldwide Works. Tell us about that and the work that it took to put that together. But before I want us to get to that particular part of your life, you led the early research into the size of the internet user population in South Africa. What would you say is the difference from the first numbers you tallied and what the world looks like today?
Well, it began with writing that book in 1995, The Hitchhiker's Guide to the Internet, which was the book I was referring to earlier that the publisher approached me to write. And when I wrote that book, it became the only internet guide for South Africa, and it made me by default, the local expert on the internet, even though there were people who knew a lot more than I did. But I was then approached by a lot of people to consult to them about this thing called the internet. I didn't know anything about consulting. I hated it. The idea of charging people by the hour just didn't make sense to me. Being a journalist,
it's a different world.
Yeah. But what I did realize was that to be able to consult, I had to do research. So I decided to create a research business, brought in two partners who completely by accident I got chatting with about this idea. We formed a company called Media Africa, and we conducted the first research into the size of the internet user base in South Africa. It was a few 100,000 people, so it was easy to count. We were attacked by what was then the incumbent tech research company in this country. You don't hear much about them these days, but back then they were big. And they had called us in, and we went to see them thinking they were going to offer some kind of partnership with us, but all they wanted to do was shout at us for what they called destroying the price structure of the industry, which means we charged what we thought the research was worth, whereas they were charging 10 times more. And the main thing that they criticized us for was that we didn't have any methodology. The fact is we didn't need methodology because the user base was so small.
Yeah, the size of the user base was tiny.
Yeah, and that's what we did. We kept it simple. And that's what this company didn't understand. They didn't understand the need for simple understanding of market size.
I do hope you added more zeros, though, Arthur. But I want to pick up that conversation after this break. We're in conversation with Arthur Goldstock, of course, in our feature, How I Make My Money.
The Money Show with Stephen Grootes is brought to you by Absa CIB. Proud to support Gensa Energy's investment in the infrastructure powering West Africa's growth.
The Money Show, How I Make My Money.
And we're in great conversation with Arthur Goldstock, the founder of Worldwide Works, which is the next part of the conversation I want to get into. You start this research company. You almost scolded by another research company for saying you're coming in too low in terms of pricing. Do you restructure the way you do things, and do you get a whole lot more calls asking you to do the tallying of numbers when it comes to the web, first of all, but also just users in South Africa?
We got a lot of calls that asked for very, very limited kinds of research, and we had to identify what made sense and what we should start counting and what we should avoid. And one of the early areas we looked at was e-commerce or online retail. And this was in the 1990s when it barely existed. But what it did mean was that it was a lot easier to count back then. And it also meant that we could start measuring it at a time when no one else was measuring it, when it was easy to measure. And the result of that was that it gave us a baseline on which to look at growth in the years to come. So as small as it was clear that eventually it would grow significantly. Again, looking at science fiction, you could see online retail was the obvious way of shopping in the future. But we knew it would be a distant future, so we just started at that stage, counting it up. But what happened then was that company, it was called Media Africa, was acquired by a consortium of companies that wanted to list on the stock exchange. I think there were 12 companies that were pulled together, and we were actually the smallest of the 12. So we had the least say in how the overall business was run. But we thought it was way cool. We in the startup, and suddenly we listed on the stock market. Except what we didn't understand was that the people running the business did not necessarily have the ability to run a complex group like that, and they certainly didn't understand what we were doing. And one day the CEO called me in and he said, "This thing that you're doing is passé." I said, "What thing that I'm doing?" He said, "This internet thing." And that's when I knew I had to get out of there. And literally a month later, Worldwide Works opened its doors. This time it was only myself. My wife Cheryl and I sat together one night brainstorming the idea for what we would call this business. And up came Worldwide Works. And that was 26 years ago. I've never looked back from that. And walking away when someone said that the internet was passé in the year 2000 was one of the best things I ever did.
Best decisions you ever made, and I'm glad you did. The world is better for it. Before I let you go, though, Arthur, just 3 innovations that you've witnessed throughout the years of covering technology that you deem your favorite. I mean, you've seen Apple, you've gone through Google, the likes of Facebook, all these things that have come up while you were reporting, the 3 that have been your favorites over the years?
Well, there's 4 actually that transformed the world. And I won't say they're my favorites, but they're certainly the ones that changed the world. The first was the internet back in 1994 when it first went commercial. The second was the smartphone. You could say the mobile phone actually back also in 1994, but when it became the smartphone around 2008 with the launch of the iPhone first and then the following year Android phones, that was the next big revolution. That was far bigger than what it looked like at the time. And then cloud computing, which actually began in 2006 when Amazon built the basis of Amazon Web Services. And your readers might be surprised to know, but some will know, that the original cloud was built in Cape Town. They set up a developer center in Cape Town and they created something called EC2, Elastic Cloud Computing. And that was the basis of Amazon Web Services, which is today Amazon's most profitable division. So that was 2006, but it was only 2012 that the cloud started becoming truly commercial. That was the year that Microsoft ran the first ever TV ad for cloud computing.
Yeah.
It's one of my favorite pieces of trivia, that particular one. And then the cloud and the growth of the cloud along with mobile in effect dominated the growth of the digital world for the next decade until 2022, November 2022, when ChatGPT suddenly emerged. And I'd been watching the emergence of AI for about 10 years, and I saw the potential of something like ChatGPT emerging. I just had no idea how big it was going to be.
And I can't wait for you to unearth even more, getting the front seat to more innovations. And unfortunately, that innovation of time we've run out of. Arthur Goldstock, the founder of Worldwide Works, joining us here for How I Make My Money. And that's how he makes his.
The Money Show with Stephen Grootes is brought to you by Absa CIB. Proud to support Gensa Energy's investment in the infrastructure powering West Africa's growth.
Join us for more conversations around money. Tomorrow we speak to MTN about their results and how they've been faring, and also some great conversations about money. Stay in the black.